Hello, I'm Lelda Smits for the Finance News Network, and joining me from natural health company Blackmores is its CEO, Christine Holgate. Christine, welcome back to FNN.
Thank you.
Blackmores has just released its first half results. What were your highlights?
I think the real highlight for me was, it's not just that we had a great sales and a fantastic profit result, it was that every major region inside our business, sort of every team, really delivered a strong performance. And I think when you're running a company and you can see that right across your business, just the camaraderie with our people, it's awesome. And that's what I'm most proud of.
Now, Blackmores decided to boost its dividend payout by 55% over the half. Why did you decide to offer such a high dividend?
I think firstly, it was a great way to reward our shareholders for being with us on the transformation journey and having that same passion and belief that we do. But secondly, I think it does reflect the confidence that the board has in the organisation and where we believe this business will be. It's also the reason that why we stopped the drip. You know, our balance sheet's really strong. We've reduced our debt significantly, in fact, more than halved it in this period of time, our net debt. So that really strong balance sheet, plus the really strong results, has given us the confidence to be able to come back. And I think it's really special for shareholders to give them the dividend.
Okay, now the company delivered a record interim profit. What were the key areas of growth?
Look, there was a number of areas that really contributed to that. Clearly, when you've got sales growing so strong inside your business, it's not just the sales part that really adds to that, but the volumes that come through enable you to drive really big efficiencies. But we have been transforming our business, and particularly in the last 18 months, and some of those initiatives that we've put in place, you can see really coming to bear.
Certainly. Turning to Asia now, how did Blackmores operations perform in the region over the period?
Look, I'm really pleased with our Asian result. On a top line, we grew sales by 5% across the region. And that was taking into account some challenges in Thailand, which for a long time has been our biggest business. So to have all our other Asian markets coming through and delivering record performances, I mean, Malaysia was up nearly 11%, Hong Kong was up over 20%, and some of those smaller markets really delivering records. It was a pretty fantastic result.
Okay, now overall, Blackmores improved its financial position and balance sheet over the period. How was this achieved?
That is one of the things I'm really pleased about. And again, it goes back to, you know, it's a combination of higher sales, really tight inventory management, working with our suppliers, and that has really driven fantastic improvements in our working capital and cash flows. And in fact, our cash conversion and our working capital improved by 118%, which is pretty significant. That enabled us to really reduce our net debt from 82 million all the way down from 37.
In relation to debt, you took on additional debt to purchase bioceuticals 2.5 years ago. How has the business impacted Blackmores' results?
Well, bioceuticals has gone incredibly well for us. Sales are up almost 20%, but the earnings are up about 40%, and that's off the back of a really strong year. And I guess what I'm really proud about is that the debt that we took on and our shareholders was a new thing as acquiring a business and taking that amount of debt on. We've now paid that debt off. It added profits from day one.
Okay, and Christine, what challenges has Blackmores faced over the period? And looking ahead, what challenges will it be tackling?
The challenges that we've had and continue to have is because our sales are so strong. That means we've really had to keep up with this really strong pace of demand. And that's not just me, that's our suppliers. I mean, I'm forever grateful for how they partnered with us. And that's actually critically important for me because at the end of this, there are consumers who take our product and have real health needs. And I think it's really important that we honour their need and have those products available. But that has been a huge challenge and it continues to be one.
Finally, Christine, could you outline Blackmores' strategy for the remainder of the 2015 financial year?
I think it's really important for the next 6 months that we continue to focus on our strategic priorities. Those of what we've been delivering, that's what we've committed to our shareholders, and that's what we're going to do, whether that's growing in Asia, more operational efficiencies, better understanding our consumers, and really driving product leadership. They've worked well, and that's what we need to focus on for the next 6 months. The first 6 months have given us a really strong foundation in case there's something that we don't know about yet. And, I don't know what I don't know, so I still think it's too early to predict. But what I would say is I'm confident that we will deliver a good return to shareholders at the end of the year.
Christine Holgate, thank you for the update from Blackmores.
Thank you.